So we have completed so far e-way bill. Now the next area that we are going to discuss is value of supply, segment 7. In this value of supply, we have only one section, that is section 15, and section 15 says that the value of supply will be the transaction value. So we have section 15 subsection 1 which says that the assessable value equals to transaction value. What is transaction value means? The price involved in the transaction is known as transaction value, and the price involved in the transaction means the price actually paid or payable. For example, I am selling you a product for 100 rupees, then 100 rupees will be taken as the transaction value. So assessable value equals to transaction value determines in terms of section 15 if the following conditions are satisfied. What are the two conditions that should be satisfied? Supplier and recipient are not related. What if they are related? Then transaction value not applicable. Means what is transaction value? I told you the value given in the invoice. So transaction value not applicable. Then we need to determine the value as per rules. Okay. So price must be the sole consideration. Supplier and recipient are not related. You just write down. So if these conditions are not satisfied, if conditions are not satisfied, then value is open market value, or the fair market value that should be taken, because in some questions they have given related parties, they will give transaction value also, they will give open market value also, but we need to take open market value. So remember, assessable value equals to transaction value, and if two conditions are satisfied, what are the two conditions? Price must be the sole consideration, supplier and recipient are not related. Some other person, any expenditure I need to spend, you spent means that is an indirect consideration for me, correct or not? So therefore any amount which is liable to be spent by the supplier but which is spent by the recipient. So in recipient incurs expenditure on behalf of supplier, such expenditure should be included in the value as per 15.2b. Is it clear or not? Then next one. So 15.2a we discussed, 15.2b we discussed. Look into 15.2c. Supplier is incurring some expenditure. Supplier incurs some expenditure, then that expenditure is charged to recipient. Will that expenditure be included in the value? Yes, of course. That expenditure will be included in the value. When it should be incurred? Anytime before delivery of goods or supply of services. For example, packing charges. Packing charges I will be spending and in turn recovering from you. Definitely it will be included. Or advertisement charges, or design engineering charges, or installation charges. Any amount which the supplier is incurring and recover from recipient should be included. That is 15.2c. Supplier is incurring expenditure and recover from recipient in the course of supply. This will be included. This pure agent is not applicable for you, don't bother. So in your syllabus it is not there, pure agent is not there, so you don't have to bother about it. So that is about 15.2c. 15.2d says interest, late fee or penalty for delay in receipt of consideration. That is, I have to get the money on time, you did not pay me money on time, for which I will be charging you interest. That should be included in the value. Got it? So what are the four inclusions we have seen? 15.2a, taxes, duties and cess other than GST should be included in the value. 15.2b, recipient is incurring the expenditure on behalf of the supplier, so that should be included, and supplier incurring the expenditure and charged it to recipient. Next, number 4, interest, late fee or penalty for delay in receipt of consideration. Then subsidy. Subsidies are divided into two, directly linked to price, not directly linked to the price. Not directly linked to the price means what? Subsidy is no way connected to the price. So for example, subsidy received for setting up a factory in backward region, that is no way connected to outward supply. Subsidy received for given employment to women, that is no way connected to outward supply. So that should be ignored. So subsidy not directly linked to the price, that is you get the subsidy irrespective of the outward supply, ignored and not considered for value. So don't consider at all. So what is the treatment? Keep quiet. You understood? The treatment is keep quiet, shut everything. You got it? So don't do anything. That's what. That if you do something, no, the answer will go wrong. Better leave it. Okay. when the subsidy is no way connected to the price, ignored and not considered in value. Why it should not be considered in value? Because it's an independent activity. It will be treated as donations. So like some donation which is received, conditional donation, unconditional donation, in that category it will come. Then suppose if the subsidy is directly linked to the price. Directly linked to the price means what? With respect to every product sold or every service rendered, that subsidy will be given. For example, subsidy for selling goods at a concessional rate to backward region people, so which is related to sale. Subsidy for providing coaching to below poverty line students, so this is related to my outward supply. I am getting that subsidy that is directly linked to the price. Now we need to see whether it is from CGST or it is from others. If it is from central government or state government, even though it is consideration or not treated as consideration, it will not be treated as consideration. That's why it should not be included in the value, to be excluded from the value. What if the subsidy is from others? Others means NGO or a holding company or some other person, then it will be included in the value. So subsidy divided into two: directly into the price, not directly into the price. Not directly into the price, ignore and not consider in value. Otherwise, so directly linked to the price, from CGRSG to be excluded, from others it is to be included. Now when the question we are doing, when in question, what happens? There are two different treatments that is possible, view 1 and view 2. So depending upon the view, we need to accordingly change the answer. Okay, so you can make note of this question if you want. That is, there is a person, there is a coaching center. Okay, coaching center provides need coaching to students at rupees 60,000 per student. At rupees 60,000 per student, they received a subsidy of rupees 5,000 from an NGO, and rupees 4,000 from state government of Tamil Nadu. They received a subsidy of rupees 5,000 from NGO and 4,000 from state government of Tamil Nadu. So per student. Okay, now what will be taken as the value of supply in this case? What is the value of taxable supply? What is the value of taxable supply? What is the value of taxable supply? Now there are two assumptions which are possible. What is that? Assumption number 1, the price given is after reducing this 5,000 and 4,000. That is assumption number 1 or view number 1. So that view can be taken. So view 1 is price after considering subsidy. What is the meaning of price after considering subsidy? Price after considering subsidy. Price after considering subsidy means given price is there na, that 60,000. So there is some X price. From that they reduced 5,000. They reduced 4,000. That's where we got 60,000. That is the meaning of price after considering subsidy. There is another view. What is that another view? Price without considering subsidy. View 2. View 2 is price without considering subsidy. Means without considering subsidy means what? Subsidy is not reduced. Subsidy is not reduced from the given price. Okay, so means the given price is before subsidy, so that X itself is 60,000. They have not reduced. These are the two views which are possible. Now what we need to do in this case? First we need to take the transaction value. What is the transaction value? That is the price involved in the transaction. So the transaction value is 60,000. Let's take view 1. So view 1, transaction value 60,000. What is the first subsidy? Subsidy from NGO. Okay, subsidy from NGO. Subsidy from NGO to be included or to be excluded? Subsidy from NGO to be included or to be excluded? To be included. Subsidy from NGO is to be included. In the given price it is excluded. So therefore we need to include, simple. So subsidy from NGO as per provision, if you see, is it from CGST or is it from others? It is from others. So therefore to be included in the value. And in the given price it is what? It is already included or not included? Already included. Where it is included? We reduced na. As per provision, subsidy from others to be included in the value. But what we did in the given price? We have reduced. So we need to add. We need to add. What is that we need to add? 5,000 subsidy from NGO. Then subsidy from state government. Subsidy from state government, as per provision, if you see, it is to be excluded from value. And in the given price it is already excluded. So therefore don't consider that, ignore it. So therefore you will get the value of supply. So the value of supply will be 65,000. Okay, this is the way in which you need to arrive at the answer for view 1. View 2, price without considering subsidy. So the transaction value is 60,000. Subsidy from NGO to be included or to be excluded? Subsidy from NGO to be included. In the given price we have not done anything, means it's already included. So ignore. Then subsidy from state government to be included or to be excluded as per the provision. As per provision it is to be excluded, but we have not done anything in the given price. So we need to reduce. How much is that? 4,000. If you reduce, you will get 56,000. Sir, answer will change, of course. The assumption changes, that's why answer also will change. But when question is silent, so for exam, which one we need to follow? When the question is silent, for exam purpose, we need to follow view 1. That is the price after considering subsidy. Okay, this is one way. There is an alternative way also, I will tell you. Say this. So view 1 is what? Price after considering subsidy. Correct? View 1 is price. View 1 is price after considering subsidy. Price after considering subsidy. Now from student how much we are getting? From student how much we are getting? So from student we will receive not 60. So because already we know that. So from student, price after considering subsidy means from student we will receive 60 because there is some original price. And from NGO how much we will receive? That is 5,000. And from state government how much we will receive? 4,000. So this will be taken as transaction value. Correct? This will be taken as transaction value. And from NGO 5,000, it should come in the transaction value. But state government will not come in the transaction value. So how much should be taken as a value? The value will be 65,000. Easy pa. Just divide it. From student how much we are getting, or from recipient how much we are getting, from NGO how much we are getting, from state government how much we are getting, we will get the answer. Suppose view 2. View 2 is what? Price without considering subsidy. Price without considering. Price without considering subsidy. If the price is without considering subsidy, from student how much we will be getting? From student we will not receive. So 60. So 60 we know that we will get 5,000 from state government, NGO, and 4,000 from state government. Means from student how much we will receive? Only 51,000 we will receive. 60,000 fees. In that 5,000 we will receive from NGO, 4,000 from state government. Then from student how much you will be receiving? Only 51,000. And from NGO 5,000 and from state government 4,000 as usual. So this will be transaction value. This 5,000 will come. This 4,000 will not come. So 51 plus 5,000 will be 56,000. That will be taken as the value. Is it clear here? So view 1 and view 2. So depending upon the view we need to take. And I told you for exam we need to follow view 1. Okay. See, whichever is easy for you, you do it that way. But ensure that you do it properly. Got it? You do it properly and correctly and arrive at the answer. Got it? So either this way also you can follow, or you can follow this. To be included, it is already included. So what is the treatment to be done like that? Okay. So this is the treatment of subsidy to be followed. Now that's what I have given. Next page you can see, if the question is silent, consider the given prices after reducing the subsidy amount given in the question. That is original price minus subsidy is the given price. This is view 1 we need to take as the usual assumption. Now, next one you see. Generally, incentives will be received from the government, that is Ministry of Information Technology and Electronics, for the purpose of doing UPI transactions. So there is a vendor, for example, I am the vendor and you wanted to buy this revised book. How much is this revised book? 299 rupees. What you will do? You will come, scan and you will make the payment. When you are scanning and making the payment, so I will get 299 rupees. So I will not have any deduction. So usually when you make card payment, there will be a deduction for me, that is processing fees. But in case of UPI transaction, so there will be acquiring bank like Paytm. We are having Paytm. So one voice box is there, Paytm mission is there. So you can scan and you can make the payment. So now in that case, Paytm is the acquiring bank. Will they do any deduction? No. Why they will not do any deduction? Because they will get an incentive from Government of India, Ministry of Information Technology and Electronics. Why like that? Because government is encouraging UPI transactions, for that they will receive. Now, whether the money received by Paytm from Government of India, Ministry of Information Technology and Electronics is treated as consideration? No. It is treated as subsidy. So therefore, it should not be included in value and chargeable to GST. Is that clear? So read that. Whether incentive paid by Ministry of Electronics and Information Technology to acquiring bank under the incentive scheme of RuPay debit card and low value UPI transactions. So whether it will be treated as consideration. Usually that incentive is provided if the amount in a transaction is up to 2000. So it is considered in the nature of subsidy by central government and not included in the value. Consequently, GST is not payable. Then look into the next one. Whether the incentive amount received by those acquiring banks. So for example, in our case, Paytm. So Paytm may in turn transfer the money to other people who are included in the digital payment ecosystem, like Pine Labs. Pine Labs is like one device they will provide, swiping device, Pine Labs, or merchant onboarding agencies, like that. Lot of people will be there in this UPI ecosystem. So whether all these people will receive the incentive from government? No. So only the acquiring bank will receive the incentive. In turn, that acquiring bank will share the incentive with others also. Whether others receiving incentive from acquiring bank also treated as subsidy from the government? Yes, deemed as subsidy from government. So that is the latest amendment. So it will also be treated as subsidy from government, even though government is not giving subsidy. Actually, who is giving subsidy? Acquiring bank will give that. Acquiring bank will give the incentive to other people. So all those people will treat that incentive received by them from acquiring bank as subsidy from government. So consequently, that will not be included in value. But not to everyone. So in this ecosystem, in this digital payment ecosystem, they should be authorized by government. They should be notified by government. So that is NPCI. NPCI is the authority which will notify them, so that they are covered under the ecosystem or not covered under the ecosystem. If they are covered under the digital payment ecosystem, means in the process, then they will be receiving incentive. That incentive is subsidy from central government. What if others are receiving? That is not treated as subsidy from central government. That will be taxable. Is it clear? So read this. Whether the incentive amount received from MEITY, that is Ministry of Electronics and Information Technology, shared by acquiring bank with stakeholders, is chargeable to GST. Sharing of incentive by acquiring bank with various stakeholders in digital payment ecosystem, example Paytm, Pine Labs, merchant onboarding agencies, underline as approved by NPCI. So they should be approved by NPCI. As approved by NPCI is also considered as subsidy and it will not be included in the value. Is it clear or not? So related to this, I gave one question on amendment. Have a look into that. So this is an amendment concept. I gave that question. Question number 11, page number 55. Question number 11, page number 55. HDFC Bank, an acquiring bank registered under GST, participates in the incentive scheme for the promotion of RuPay debit cards and low value Beam UPI transactions, a scheme run by Ministry of Information Technology and Electronics. Under this scheme, HDFC Bank receives an incentive of 10 lakhs for promoting RuPay debit card and low value UPI transactions. As per NPCI guidelines, HDFC Bank is required to share a portion of this incentive with its ecosystem partners involved in facilitating digital payments. HDFC Bank distributes the incentive to stakeholders like Paytm, Payments Bank and Pine Labs, which helped facilitate UPI infrastructure and merchant onboarding respectively. In addition to the compliance sharing, HDFC Bank also shares 2 lakhs with XYZ Marketing Limited, a marketing consultancy that is not part of NPCI specified ecosystem for the incentive scheme, and this distribution is not in line with NPCI guidelines. Now, first, how much HDFC has received? 10 lakhs. What is the treatment of the 10 lakhs received by HDFC? Treated as subsidy from government, and it will not be included in the value and not chargeable to GST. What about out of the 10 lakhs, 3 lakhs shared with Paytm and 3 lakhs shared with Pine Labs? Whether Paytm and Pine Labs are approved by NPCI? Yes. So due to that reason, the money received by them from HDFC is also deemed to be received from central government, and it is excluded from the value, not treated as consideration. Is it clear? Whereas 2 lakhs received by XYZ Marketing, whether XYZ Marketing is specified by NPCI? No. See that XYZ Marketing, a marketing consultancy that is not a part of NPCI specified ecosystem. So money received by them will be taxable. Now, answer the following questions based on the facts given above. First question is the incentive of 10 lakhs received by HDFC Bank from METIY subject to GST. Already we discussed that this will be treated as subsidy and not included in the value. Second part is the sharing of incentive by HDFC Bank with Paytm Payments Bank and Pine Labs taxable under GST? No. As per CBIC circular, further sharing of incentive by acquiring bank with Paytm and Pine Labs is also not treated as subsidy, not charged to GST as they are notified by NPCI to receive incentive. Then third is the further sharing of 2 lakhs with XYZ Marketing Limited, which is not compliant with NPCI guidelines, taxable under GST. Yes, because XYZ Marketing incentive received by them is not part of NPCI guidelines, and therefore it is not treated as subsidy and will be chargeable to GST. What is the total taxable value and GST chargeable? So 2 lakhs is the value on which GST will be payable. Is it clear? Out of the entire 10 lakhs, only on 2 lakhs GST will be payable. Understood this amendment here? Next, look into another one. Generally, expenses is incurred by the supplier and recovered from the recipient, correct? These expenses which are incurred by the supplier and recovered from the recipient, if it is as a pure agent, that will not be included. If it is in the course of supply, then you need to check whether it is incidental or other expenses. As this pure agent point is not there in your syllabus, so leave it, don't bother about it. But in the course of supply, incidental expenses or other expenses you need to check. If it is incidental expenses, what is incidental expenses? Without incurring that expenses, the supply cannot be made. That is known as incidental expenses. Example, you go to a restaurant, and when you go to a restaurant and you order for dosa, so what they will do, they will give only dosa or they will give chutney sambar also. They will give chutney sambar also. That chutney sambar is incidental for the purpose of giving dosa. You understood? Otherwise, only dosa, how can we eat? So chutney and sambar is incidental expenditure. Without that, dosa is not complete. Whereas you will also ask for vadakari, okay? Because dosa 1 piece, vadakari 1 dip, chutney 1 dip, sambar 1 dip, and then when you eat, ayyo, that is heavenly. Now, in this case, whether that vadakari will be coming under incidental or other. Even without vadakari also you can eat dosa, but vadakari will add value to the product. You understood or not? Therefore, that is treated as other expenses. So see this, incidental expenses which is essential to make supply of goods or services, whereas other expenses not essential but adds value to the supply of goods or services. Incidental expenses will always be included in the value, whether it is at the time of delivery or before delivery or after delivery of goods or supply of services. Example, you can see packing charges. Packing is incidental or others are incidental. Example, when you go to a restaurant and you ask for Anna, idli Anna. Now what he will do? He will ask you, okay, show me your hand, and he will put idli and chutney sambar in your hand. He will pack and give na. Correct or not? Otherwise, how you cannot bring a bowl and take that na, because that will be like ayya, amma, that category. You understood? So due to that reason, so bowl and all you will not bring. They will only pack it and give. So that packing expenditure is incidental or not? Incidental. definitely it will be included in the value. Before, at the time of delivery of goods or supply of service itself, they will do that. Sometimes installation, example, you purchased a refrigerator or you purchased a AC. When you purchase a AC, the technician will come to your home and do the installation. Then only the AC will work. Is it incidental or not? Yes. Without installation, AC will not work. So it is incidental. But when it is done at the time of delivery, after delivery, after delivery, even then it is after delivery, it should be included in the value. That is this. After delivery, installation charges to be included in value. All other expenses, check whether it is before the time of delivery or supply of services. Then only it will be included. If it is after delivery of goods or supply of services, it will not be included. For example, transportation charges. You placed an order in Blinkit to deliver one product. So now Blinkit will charge delivery charges, some 30 rupees like that they will charge delivery charges. Whether this delivery charges is incidental or others. So even without that also the product is ready, correct? Delivery is not mandatory even without that. Sometimes free delivery also they will be giving. Am I right here? So if you buy for more value, they will give free delivery. So it is not incidental, and this particular delivery charges is before delivery of goods or after delivery of goods? Before delivery of goods, correct? For the purpose of delivery of goods only they are collecting. So it should be included in the value. Whereas if some charges are incurred after delivery of the goods, example, you wanted to buy a two-wheeler and you selected one two-wheeler which was like copper color, okay? So you went to the showroom and you saw the two-wheeler, it was so nice, and the color you did not like. You asked them what are the colors available. They said different color options. They gave you the book manual and you saw that copper color was very good to look. So therefore you ordered, okay, copper color you need like that. They said, okay sir, so you pay the money, we will deliver to you like that. And you paid money, you came home and they called you, sir, your vehicle is ready, you can come and take the delivery. And so when you go there to take the delivery, usually one black color cloth they will close, na, ta-da, like that they will show. You will get a heart attack because you ordered copper, it came orange. You understood? Literally like orange color. Orange color bike and all when you are taking, that too you live in a DMK area. So therefore what will happen? So very risky. You understood or not? So therefore you requested the dealer, sir, change the color, sir. This orange and all if I take, my father is DMK, municipal somewhere member, sir. Or my uncle or aunt will be related to some party, sir. Definitely they will kill me as if I joined for BJP and all. So change the color. So therefore they change the color. For color changing you will spend some money. That is called as customization charges. Is it at the time of delivery or after delivery? After delivery. Therefore will it be included in the value? No. It's an independent activity. Got it? No way connected. That is this. After delivery of goods or supply of services, customization charges to be excluded. Understood or not? Incidental. The moment it is incidental, don't see anything. It will always be included. If it is others only, you need to check before the time of delivery or after delivery. Then look into exclusions from the value of supply. So when it comes to exclusion from the value of supply, we have three exclusions. First one is, before or at the time of supply if the discount is given. So discount given before at the time of supply, what discount? Trade discount. So there are different types of trade discount. So you will go and do the bargain and you will tell, so my friends will come, my relative will come next time if you give me discount, like that and all you will tell, na. So that is what? That is trade discount. And sometimes you will tell, I will buy 100 quantity and like that you will start. And thereafter you will buy one only. But that idiot will have given discount to you. And all these are trade discount. When it is given before at the time of delivery, is it allowed as reduction? Of course, yes, it is allowed as reduction, but it should be duly recorded in the invoice. For example, a lot of people I have seen, they go for the shopping, mainly girls and all. So this Pandi Bazaar, that side and all, they go for shopping. When they go for shopping, footwear and all will be there. Lot of footwear shops will be there. They buy lot of footwear. So boys means one footwear for 4 years, one footwear only. Okay. But girls and all like different garments, matching they will buy footwear. And this footwear when they are purchasing, that person will tell how much is the cost of that footwear. 500 rupees like that he will say. Our people will start at 100 rupees. 100 rupees will you give? You give, otherwise I will go like that. And that person will tell, okay, wait, I will give you, because for him sales has to happen. He will give a 200. At that place and all you don't stand, because when you stand, I don't know, shopkeeper will take what and hit you. You understood or not? So be careful when you go with shopping with girls, okay? And So they will not have any problem, but somehow they will get it here. I don't know how. 200 rupees. Now the shopkeeper will raise a bill. What is that bill? Value 500 minus discount 300. So 200 rupees he will mention. So now GST payable only on 200. It's a pre-supply discount. Pre-supply discount. Discount given before at the time of supply, trade discount allowed as deduction. If the discount is given after supply, post-supply discount, but the terms are agreed before at the time of supply, that is say cash discount. So what they will tell, if you pay within 10 days from the date of sale, so I will give you 2% cash discount like that. So cash discount, terms are agreed before the time of supply, yes, but the discount is given after supply. Is it allowed as deduction? Of course it is allowed as deduction, but there is one problem. Invoice already prepared, so therefore we need to give a credit note. When we give a credit note, the recipient should reverse the ITC. Why when we give credit note, the recipient should reverse the ITC? Have a look into this example. First, there is a supplier who gave a invoice for rupees 10,000 excluding GST at 12%. Okay, excluding GST at 12%. Invoice for 10,000 excluding GST at 12%. For this invoice, in the books of supplier, okay, in the books of supplier and in the books of recipient, tell me what is the journal entry in the books of supplier. Come on, in the books of supplier, what is the entry for this? Sales? No, sales entry or sales entry. What is that? Recipient account debit, credit sales, recipient account debit to sales account and to GST payable, that is our liability. So recipient account 11,200, 10,000 into 12%, 1,200, to sales account 10,000, to GST payable 1,200. Then in the books of recipient, what should be taken? So that is purchase account debit. So purchases account debit, how much? 10,000. Then ITC account debit, how much? 1,200. To supplier account, how much is that supplier account? That is 11,200. So then this is the journal entry in the books of supplier and in the books of recipient. Then next, what will happen? A cash discount is given. Cash discount, how much is the cash discount? Say 5%. Cash discount at 5% of sale price. So how much is the cash discount for? 560 rupees, correct? 11,200 pa, 11,200 into 5%, that is 11,200 into 5%, that will come to 560. For that 560, what is the entry in the books of supplier? In the books of supplier and in the books of recipient. Come on, in the books of supplier. So discount is expenditure, correct or loss? So discount account debit, how much? 500 or 560? 500, because in the 60 is the GST component, 500 is the value component. You recognize sales only 10,000, 10,000 into 5%, 500 only is the discount account debit. Then that 60 rupees, to that extent your liability will be reduced. Liability shows what balance? Credit balance. When you make a debit, it will be reduced, correct? So GST payable account debit, So because when we give credit note, what will happen? Our liability gets reduced, 60 rupees to recipient account. How much is recipient account? 560. As recipient account is credited, that's why the name of the document is credit note. Who will be giving credit note to whom? Supplier will be giving credit note to the recipient. In the books of recipient, what is the journal entry in this case? Come on. So discount is an income, correct? So supplier account debit, the creditor balance will get reduced. Supplier account debit, how much? 560, and they got a discount as an income. So to discount account 500, and they have availed ITC of 1,200, but they cannot take entire ITC because 60 rupees related ITC they need to reduce. ITC shows what balance? Debit balance. To reduce it, they need to do the credit. So to ITC account, how much? 60. So therefore they need to reverse the ITC of 60 rupees. That's what they are telling. To the supplier, the liability gets reduced to the supplier if the recipient reverses the ITC. Read this wording. Suppose if the supply discount is given after supply but terms are agreed before supply, cash discount treatment, it is allowed as deduction if credit note is issued. A credit note is issued and recipient should reverse the proportionate ITC. Recipient should reverse proportionate ITC. Now, how will the supplier ensure that recipient reverses the proportionate ITC? The problem is that discount, I can give a credit note and my liability comes down if the recipient reverses ITC. How will I know the recipient reverses the ITC? For that reason, they have got a circular. They have brought in one circular. They are telling first, if the recipient is required to reverse ITC 5 lakh rupees against this supplier for a financial year, against this supplier, I may give 100 credit notes, I may give 100 credit notes. Cumulative all these 100 credit notes in a financial year, how much is the ITC component that the recipient should reverse? 5 lakhs, up to 5 lakhs. Ask him to give a declaration. Who? Recipient will give a declaration to the supplier that recipient has reversed the ITC. So when the declaration should be given? After the financial year. After the financial year gets over, he will give the declaration. Now I can show my liability reduced. I can give credit note and my liability can be reduced, but the recipient should give me the declaration after completion of the year. Otherwise tomorrow in audit, so department will ask me to pay liability on this. Whatever reduction I have got, I need to pay. Are you getting this? Suppose if it exceeds 5 lakhs in a financial year, then the recipient will have a CA-CMA. That recipient CA-CMA should give a certificate that recipient reversed the ITC. So they have brought in this amendment. Say this. How to ensure recipient has reversed the proportionate ITC? If the ITC does not exceed 5 lakhs in a financial year, supplier shall obtain certificate or undertaking from the recipient. Suppose if the ITC exceeds 5 lakhs in a financial year, supplier shall obtain certificate from CA-CMA of the recipient. Is it clear? This 5 lakhs should be what? Value ITC component. ITC component. That is, in our example we discussed this 60 rupees. That is credit note related ITC component. Credit note related ITC component which they need to reverse. So should be 5 lakhs. And in a financial year, against all supplier, one supplier, against one supplier, not all supplier, against one supplier. And certificate or undertaking includes details of invoices. So what are the invoices for which these credit notes are issued, and with supporting details like GSTR 3B or DRC 3. How they will reverse ITC? They will reverse ITC through DRC 3, okay, or GSTR 3B. That. Then certificate of CA-CMA shall contain UDIN, unique document identification number. Otherwise what we will do now? One certificate recipient will get and he will take photocopy of that and he will distribute to all the suppliers, to whomsoever it may concern. My client so and so person has reversed the ITC. Like that one document they will get from a CA-CMA and they will do Xerox. Okay, give it to all the suppliers. No, not allowed. So every supplier wise they need to get a separate certificate, and every certificate should have a separate unique document identification number. And ITC reversed in a financial year. Sir, while computing this 5 lakhs, whether it is only CGST component or SGST component or in total, because if it is interstate supply IGST, if it is intrastate supply CGST, SGST. So total you see, ITC reversed in a financial year is sum of CGST, SGST, IGST and compensation cess. And the certificate or undertaking not required to be uploaded in the portal. No need to upload in the portal here. Just we need to get it. We need to get it, and whenever the officer is asking during proceedings, we need to submit, but made available to officer during any proceeding. And even we need to do it for the last period also, that is 17, 18, 18, 19, 19, 20, every financial year. Yes, every financial year. Now the supplier need to get it from the recipient. Is it clear? So this is a retrospective amendment for all past periods also. So this is applicable for all past periods. Applicable for all past periods. Okay, applicable for all past periods, all past periods. So even for old periods also this will be applicable, and they need to do that. Okay, applicable for all past periods. Next, So you can see one question related to this, question on amendment, which I gave in page number 55, question number 10. Page number 55, question number 10. PQR Limited, a manufacturer, entered into contract with DF Limited, a distributor, on 1st April. What is the date on which contract is entered? 1st April 2024. The supply was made on 10th May 2024 with a value of rupees 25 lakhs and the applicable GST rate was 12%. Payment terms required full payment within 30 days of the invoice date. So, full payment within 30 days and a post-supply discount of 7% was agreed upon. When? Conditional on DF Limited successfully selling 80% of the goods within the quarter. So, I am PQR, you are DF, and if you sell more than 80% in a quarter, I will give you a post-supply discount of 7%. Now I will not give, but I have entered into agreement with you that I will give you discount. Means post-supply discount, whether the terms are agreed before the time of supply, yes. By 30th June 2024, DF Limited sold 85%. So you sold 85% of the goods. So you are eligible for the 7% post-supply discount. Yes, 7% post-supply discount you are eligible. Consequently, on 15th July, PQR Limited issued a credit note for such discount to DF Limited for the post-supply discount. DF Limited had availed ITC on the full invoice value as they complied with the conditions of availment of ITC. To comply with the provisions of section 15(3)(b), DF Limited is required to reverse the ITC proportionate to post-supply discount, because there is a condition. Supplier can take post-supply discount as reduction provided the recipient reverses the ITC, correct? So in this case, how much ITC needs to be reversed by DF Limited based on the credit note issued by supplier? How much ITC they need to reverse? Simple pa. What is the value of the goods? What is the value of the goods? 25 lakhs. In the 25 lakhs, how much will be the discount that will be given? 7%. So 25 lakhs into 7%. In that, what is the GST component? 12%. Per value discount will be given. Yeah, in that discount, what is the tax component? 12%. So 25 lakhs into 7% into 12%. How much that comes to? 21,000. So therefore, to the extent of 21,000, ITC needs to be reversed by DF Limited. What is the consequence to PQR Limited based on the credit note? What will happen? Just now I told you. So whenever the invoice is, the credit note is given, what will happen to the liability of the supplier? Gets reduced. Okay. So GST liability of PQR gets reduced to the extent of 21,000 as and when credit note is issued and reported in GSTR1 of PQR Limited. Then third, how PQR Limited can prove that recipient has reversed the ITC? How can he prove? Simple. So supplier should get, that is PQR should get a declaration, no certificate from CACMA, because the amount does not exceed 5 lakhs, 21,000 only. As per CBIC circular, as the ITC reversal in a financial year does not exceed 5 lakhs, PQR Limited shall obtain a declaration from DF Limited that they have reversed the ITC along with supporting documents, that is GSTR 3B, DRC 3, etc. Then fourth point, what will be your answer in 3 above? If the ITC to be reversed is 5,50,000. If the ITC reversed exceeds 5 lakhs in a financial year, DF Limited shall obtain certificate from CACMA certifying ITC reversal along with UDIN and supporting documents. Is it clear? And this procedure is also applicable for the past periods. So that is about this particular amendment. Then look into one circular, whether GST applicable on additional or penal interest on the overdue loan. What is penal interest on the overdue loan means? First, when you borrow, you will pay in EMIs. Every EMI will have an installment, and if you miss the deadline, what will happen? They will be levying a penal interest. Example, you purchased a mobile using Bajaj Finance. You converted into EMIs. You have to pay EMI. If you miss a EMI, what they will do? They will charge a penal interest. What is the treatment of that penal interest? Is it taxable or exempted? Why first of all this discussion comes? Because interest is divided into two in GST. One is interest on loans, advances, deposits. That interest on loans, advances, deposits will be exempted. Interest on account of delay in receipt of consideration, that will be included in the value and taxable accordingly. So that's why this discussion or this conflict will come, whether the penal interest will be taxable or penal interest will be exempted. For that, we need to understand whether the transaction is hire purchase transaction or hire purchase financing. If it is a hire purchase transaction, there will be only two parties, hire vendor and hire purchaser. I am the hire vendor, you are the hire purchaser. I will give you asset, you will pay me EMIs. Now, that interest is included in the value and chargeable to GST. So, if you miss a EMI, I will collect a penal interest, that is also chargeable to GST. If the main interest is chargeable to GST, penal interest is also chargeable to GST. You can see here, supplier collects the consideration in installments, where such installment cover price of the goods plus interest towards time value of money. This interest is included in the value, and even penal interest for delay in payment of installment is also included in value. Then hire purchase financing. In hire purchase financing, what will happen? Supplier will finance, like supplier will receive the money from the financier. For example, Bajaj Finance. So I am a mobile shop, Purvika Mobiles. You are recipient, Bajaj Finance. Now you will buy the mobile. Purvika Mobile seller will receive the money from Bajaj Finance. In turn, Bajaj Finance will collect the EMI from you. Correct? Now whatever money that Bajaj Finance collects will include interest also. That interest will be exempted. What if it is no cost EMI? There is no interest. The question of taxability will not arise. If it is interest, then chargeable to GST or exempted. Exempted. Why exempted, pa? Why exempted? Because it will come under interest on loans, advances, deposits. Due to that reason, it is exempted. Now that EMI you may miss. What about the penal interest? That is also exempted. If the main interest is exempted, penal interest is also exempted. Supplier finances the product and collects principal and interest as EMI or installments, and interest involved in such financing transactions are exempted. As interest is exempted, penal interest is also exempted. Understood now? This is clarification. Then look into this treatment of inclusions or exclusions. So whenever you get a question related to valuation, first you need to see price, thereafter all the amounts given in the question. First you need to interpret each and every amount. As per provision, whether it is to be included or to be excluded, you need to check. Say for example, packing charges. Packing charges to be included as per 15(2)(c), and in the given price what they have done? Already included. So ignore, don't do anything. Then second, you need to see another amount, and as per provision it is to be excluded. Example, subsidy from state government to be excluded, and what they did in the given price, it is already excluded. So ignore. Then next one, suppose if it is entertainment tax other than GST to be included in the value, and what they did in the given price, not included. So we need to add. Then an amount is to be excluded. Example, pre-supply discount. In the given price they have not deducted the discount, so you need to deduct. Is it clear? Next, whether no claim bonus given by insurance company to insured can be claimed as deduction while computing the value of supply. What is no claim bonus? That is, we will be paying the renewal premium. You have two-wheeler. When you have a two-wheeler, you will pay the renewal premium for the two-wheeler. Correct? When you pay that renewal premium for the two-wheeler, this particular renewal premium when you are paying, you don't have to pay full renewal premium. They will give a no claim bonus. Example, you have to pay 4,000 rupees. 500 rupees they will give a no claim bonus because last year you did not claim anything from the insurance company. So 4,000 minus 500, you will pay only 3,500. So GST will be computed on 3,500, not on 4,000. Is it clear? So say this, whether no claim bonus given by insurance company to insured can be claimed as deduction while computing the value of supply. Yes, provided it is shown in the invoice. Yes, it will be shown. They will give a premium receipt. They will tell, Aya, your renewal premium is 4,000 minus no claim bonus 500. So difference 3,500 you need to pay like that. So it shall be claimed as deduction as pre-supply discount from the value if the same is shown in the invoice as per 15 subsection 3. Got it? Concentrate, don't sleep. Now next one, TCS. What is the treatment of TCS? TCS under Income Tax Act. The treatment of TCS under Income Tax Act is very simple. First of all, TCS who will collect from whom in income tax? Supplier will collect it from the recipient. Simple pa. I am a dealer, car dealer. You are buying a car from me for 10 lakhs and you will be giving me 10 lakhs plus GST plus TCS. While computing GST, whether TCS should be included or not? No. Because first of all is this TCS your income, your expenditure or your income when you are buying a car. When you are buying a car, your income or your expenditure, but income tax is a tax on income. Due to that reason, this TCS is an interim levy, not having the character of tax, so it should not be included in the value as per CBSE circular. See there, TCS not to be included in value. Under section 15 subsection 2 of CGST Act, any taxes, duties shall be included in value, but TCS is not includable in the value. Why TCS not includable in the value? As it is an interim levy. Interim levy means what? Stopgap arrangement. Why they will levy? If you are able to buy a car, 1% is 10,000 pa. 1% is 10,000 means 100% is how much? 1% is 10,000 means 100% is how much? 10 lakhs. When you are able to buy a car for 10 lakhs, what is your source of income? From where you got money? To find that source of income only they will be levying this. That is interim levy, but not having character of tax, so it should not be included. Then next, we learn business facilitator and business correspondents. Who are business facilitators and business correspondents? Agents of the bank. And what they do? They will provide the services on behalf of the bank and collect the service charges from the customers, and they will be paying it to the bank. Say this. So there is a banking company, there is business facilitator or correspondent and a customer. Now, banking company, on behalf of banking company, business facilitator or correspondent will provide the services to the customer and will receive the service charges. Is it clear? And this service charges will be remitted by business facilitator or correspondent to banking company, for which banking company gives the commission. Now, in this case, what should be taken as value of supply? The service charges should be included in whose value of supply? Banking company value of supply. Then what should be included in the value of supply of the business facilitator correspondent? Commission. On that commission also, who will pay GST? If it is business correspondent, FCM. If it is business facilitator, it will be RCM. See there, in case of business correspondent, GST payable under FCM on the commission, and in case of business facilitator, GST payable under RCM by banking company on the commission. Then there is one CBSE circular related to value of molds and dies to be included in the value. So look into situation number 1. In this, what happens? There is Maruti Suzuki, original equipment manufacturer. They are making cars, and they have ancillary industry, MSR's IR India Private Limited, which is a component manufacturer. What they do, say for example, they are making car doors. Now first, Maruti Suzuki enters into contract with IR India Private Limited to buy the car doors made by IR India Private Limited, and for which, as per contract, molds and dies, die means to bring the product in requisite shape, die is to be given by original equipment manufacturer. So write down point number 1. So first, Maruti Suzuki entered into contract with IR India Private Limited for purchase of molds and dies manufactured by IR India Private Limited, for which molds and dies to be given by original equipment manufacturer. Now OEM is supplying the molds and dies. Whether these molds and dies supplied by OEM to component manufacturer, supply or not a supply? Not a supply. Why not a supply? There is no consideration, and it is not permanent transfer or disposal of business asset on which it is available, because those molds and dies will be returned. So it is no consideration, temporary transfer, and not a supply. Is it clear or not? Next. Now what happens? IR India Private Limited is selling the car doors. For the car doors, who is the seller, who is the buyer? For the car doors, who is the seller, who is the buyer? IR India Private Limited is the seller. Maruti Suzuki is the buyer. Now in this case, the buyer is giving me molds and dies. Now I am IR India. Buyer is giving me molds and dies. Whether that molds and dies to be included in the value? No. 15(2)(b) will not come. As per 15(2)(b), any amount that the supplier is liable to pay but which is incurred by the recipient should be included. But first of all, here I am supplier and I should buy molds and dies. As per contract, I am supplier pa, IR India pa, should I buy the molds and dies? No. Who should buy the molds and dies? Recipient only should buy. That is, Maruti Suzuki only should buy. They only purchase. It will not be included in the value. Is it clear? So therefore, sale of car doors, point number 4, sale of car doors, value of molds and dies not required to be included, because as per contract, anyhow recipient only should buy and recipient only purchase. So that's what I told you. If recipient is incurring some expenditure, If recipient is incurring some expenditure on his own account, it will not be included in the value. Got it? Now, next point. Now this Maruti Suzuki will buy the molds and dies from the market, for which they will pay 10 lakhs plus GST 1,20,000. Can this 1,20,000 be availed as ITC? Yes, they can avail the ITC, not at all a problem, because as per contract they only should buy and they have purchased, so it is in the course or furtherance of business. Molds and dies nowhere in the blocked credit and used in the course or furtherance of business, they can take ITC with respect to that. Understood? Next one. Second situation. In second situation, what happened you see. First, Maruti Suzuki entered into contract with component manufacturer to buy the car doors manufactured by component manufacturer using the molds and dies belonging to component manufacturer. Here molds and dies supplied by original equipment manufacturer. There is a difference. Now in this case, who should buy the molds and dies? IR India. Who should buy the molds and dies? IR India. But who supplied it? Recipient. So it is supplier liability met by the recipient. So therefore it should be included in the value. So second, molds and dies is 10 and it is not a supply, same. And in the sale of car doors, amortized cost. What is amortized cost means? Amortized cost means depreciable value. Molds and dies divided by number of units that can be made using molds and dies into number of units that is sold. For example, the capacity of molds and dies is 10,000 and they have made now 4,000. So total cost of molds and dies divided by 10,000 into 4,000. That amortized cost of molds and dies to be included because of 15(2)(b). Understood? Now in this case, Maruti Suzuki purchases the molds and dies and pay 10 lakh plus GST, which they cannot avail as ITC. Why they cannot avail ITC on this? Because it is not used in the course or furtherance of business. Actually, who should buy the molds and dies? Component manufacturer. But who purchased it? Maruti Suzuki. That's why Maruti Suzuki cannot take ITC with respect to that. Are you understanding this? Now, this I have just given into two parts. First, as per contract, OEM should provide molds and dies to component manufacturer. Okay. Now, who is sending? OEM is sending molds and dies to component manufacturer on free of cost basis. It is not a supply. Can the ITC be availed on molds and dies by OEM? Yes. Whether the components will be like whether the car doors, okay. So components supplied by CM to OEM, whether the value of molds and dies to be included in value or not included in value? Not included in value. Suppose if it is as per contract, component manufacturer should purchase but given by OEM. Now OEM sending molds and dies. Now also not a supply. However, ITC can be availed by OEM. No, because it is not to be purchased by them, but they purchased it. So if already they have availed, they need to reverse. And what about the components? Whether the amortized value of molds and dies to be included? Yes, amortized value of molds and dies to be included in the value. Got it? So with this, we completed value of supply. So mostly we get the practical questions on this, and this molds and dies point also can be tested because they have not asked this in the couple of attempts in the last. So therefore they can make a question on this molds and dies. Okay.